Hi, Michael Glennon from Glennon Capital, and welcome to this week's Insight. A little bit of a different insight this week. This is a company that is no longer listed, but there's some very important insights that you can take from this company. It's Dick Smith Electronics. Been very topical lately. Many headlines have been written about the demise of the brand. It's timely because this week the last store stopped trading. However, it's also interesting to note that the brand was acquired by Kogan, the Australian online retailer, and they've already turned the online sales business around and have started selling product this week. So, I'd encourage people to go out and have a look at that site. Kogan is an excellent Australian retailer. And there's a very telling story here about traditional bricks and mortar businesses and their online strategy. So I think Kogan will make a terrific success of the Dick Smith brand, but it's got hallmarks of what happened to Fairfax and how we saw Fairfax lose share in the print business to online portals such as realestate.com and Seek. So very interesting analysis done a couple of years ago on Fairfax, how many of the directors of the business didn't have social media accounts and things like that. Whereas if you look at a business like Kogan, they're up there, they've got all the latest selling techniques. So I think that this will be a very big turnaround for the Dick Smith business, very big change in strategy. And I think it's one of those examples that you can look at and say, traditional bricks and mortar businesses really need to embrace online businesses. We were never a shareholder in Dick Smith. Many of the things that have come out recently where people have done analysis and expressed all these concerns about things that they didn't think were publicly available. All of this was noted in the general media at the time that the company listed, the big change in valuation from what the business was sold by Myer from to what it was eventually floated on the stock exchange for, massive uplift, and a lot of the subsequent profit that came through was through revaluation of inventory from acquisition. So we're aware of this. We never looked at it. We didn't make a big deal about Dick Smith because we didn't own it. We didn't think it was a great quality business as it stood. So there weren't a lot of lessons that you couldn't have already picked up back when the business floated, and it's just one of those signs that if you've been around the market and you understand acquisition accounting and you look at the P&L and the balance sheet, you can avoid the disasters and avoid those permanent capital losses in your portfolio. Anyway, thanks for watching. If you've got any questions or would like to ask us anything, please feel free to use the comments or like the video. Thank you.